46. People who try to predict what will happen in the future. Forecaster. 47. A company of experts providing professional advice to business for a fee. Consulting firm. 48. A financial institution that invests money to provide retirement income for employees. Pension fund. 49. A company that is partly or wholly owned by another one. Subsidiary. 50. The minimum percentage of its deposits a bank has to keep in its reserves. Reserve asset ratio. 51. A borrowing rate that isn't fixed. Floating rate. 52. Safe to lend money to. Creditworthiness. 53. The difference between borrowing and lending rates. Spread. 54. The quantity of goods and services produced in an economy. Output. 55. To spend money in order to produce income or profits. Invest. 56. The amount of interest that a bond pays. Coupon. 57. The rate of income an investor receives from a security. Yield. 58. The cost of borrowing money, expressed as a percentage of the loan. Interest rate. 59. Having sufficient cash available when debts have to be paid. Solvency. 60. Paid work that provides goods and services. Labor.
61. The dividend paid on preference shares is variable. False. 62. If a company goes bankrupt, the first investors to get any money back are the holders of preference shares. False. 63. Stocks that have already been bought at least once are traded on the primary market. False. 64. NASDAQ and the AIM have more regulations than the New York Stock Exchange and the London Stock Exchange. False. 65. The market price of stocks depends on how many buyers and sellers there are. True. 66. Automatic trading systems do not require market makers. True. 67. Market makers make a profit from the difference between their bid and offer prices. True. 68. Current accounts pay more interest than savings accounts. False. 69. There is less risk for a bank with a mortgage than with unsecured loans without collateral. True. 70. Traveler's checks are safer for tourists than carrying foreign currency. True. 71. The majority of customers prefer to do their personal banking at the bank. False. 72. In case of a legal dispute, people can take a company's shareholders to court. False. 73. The owners of limited companies have to pay all the company's debts. False. 74. The price of floating rate notes doesn't vary very much, because they always pay market interest rates. True. 75. The owners of convertibles have to change them into shares. False.
76. Some bonds do not pay interest, but are repaid at above their selling price. True. 77. Junk bonds have a high credit rating and a relatively low chance of default. False. 78. Many companies are not owned by their managers. True. 79. External directors can usually give more objective advice than full-time directors. True. 80. Partners in British and American businesses are not liable for the partnership's debts. False. 81. In case of a dispute, people can take rightish companies and partnerships to court. False. 82. New companies can apply to join a stock exchange. False. 83. Investment banks sometimes have to buy some of the stocks in an IPO. True.
'84. The due diligence report is produced by the company's own accountants. False. 85. Bank branches are now all in shopping centers. False. 86. All interest rates are set by central banks. False. 87. When interest rates fall, people tend to spend and borrow more. True. 88. A borrower who is very solvent will pay a very high interest rate. False. 89. Loans are usually cheaper if they are guaranteed by some form of security or collateral. True. 90. If banks make loans to customers with a lower level of solvency, they can increase their margins. True. 91. One of the causes of changes in interest rates is the supply and demand for money. True. 92. Bonds are repaid at 100% when they mature, unless the borrower is insolvent. True. 93. Bondholders are guaranteed to get all their money back if a company goes bankrupt. False. 94. AAA bonds are a very safe investment. True. 95. A bond paying 5% interest would gain in value if interest rates rose to 6%. False.